Good morning. I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market alert for Friday, September 2nd. Stocks on Wall Street snapped a four-session winning streak yesterday, and they may continue to decline today as investors digest this morning's big government employment report. We'll tell you exactly how many jobs were created last month and how the market is reacting when we come back after the opening bell. But no matter what the results of that report are, it's unlikely to help the banking sector today. Financial stocks are tumbling after the New York Times reported that more than a dozen major banks are facing a federal lawsuit. The Federal Housing Finance Agency reportedly will accuse the banks of misrepresenting the quality of mortgage securities they put together and sold in the run-up to the bursting of the housing bubble. The agency is expected to seek billions of dollars in compensation.
Following that report, Bank of America is falling 6%, and Goldman Sachs is dropping more than 3%. JP Chase, Deutsche Bank, and several other institutions reportedly are also targeted by the lawsuit. Those losses in Bank of America may also be due to a report in the Wall Street Journal that the Federal Reserve has asked the company for a contingency plan to show what it would do if business conditions worsen. All this downbeat news from the financial sector is weighing not just on U.S. stock futures, but on markets around the world. Germany's benchmark DAX 30 index is sliding nearly 3%, dragged down by more than 4% decline in shares of Deutsche Bank.
European stocks are also slumping on a report by the Wall Street Journal that talks between the Greek government and international lenders have broken down. The bondholders are insisting that Greece reduce this year's budget deficit to 7.6%, but Greek officials now say that it could be more than 8.5%. The report is reviving fears that Greece may be unable to meet the requirements for a second bailout package worth about 110 billion euros.
On the corporate front, we're seeing major losses in shares of Netflix. It's dropping more than 10% after Starz said it broke off talks to allow Netflix to license its content. The online movie rental company will no longer be able to carry Starz programming once the current deal expires at the end of February. Shares of Liberty Starz are also losing ground on the news. Meanwhile, H&R Block is set to open sharply lower after it posted a bigger than expected loss in the latest quarter. That's the latest from Weiss Research. We'll be back after the opening bell with the details on that August employment report and all the market reaction.